Is it time to go long on the dollar? By www.forexconspiracyreport.com. Contrary to all expectations, Trump won the presidency. The hodgepodge of policies that he is expected to promote would perhaps stimulate the economy, increase inflation, and cause the U.S. Federal Reserve to raise interest rates faster than previously expected. That being the case, is it time to go long on the dollar? Reuters reports that dollar net longs rise in the Forex market. Speculators increased positive bets on the U.S. dollar in the latest week as investors resumed buying the greenback on continued expectations of U.S. interest rate hikes from the Federal Reserve. The value of the dollar's net long position rose to $22.25 billion in the week ended November 22nd from $20.87 billion the previous week, according to Reuters calculations and data from the Commodity Futures Trading Commission released on Monday. The dollar has been rising on expectations that U.S. President-elect Donald Trump will boost infrastructure and government spending, elevating inflation and compelling the Fed to raise interest rates. It would appear that long on the dollar is already the order of the day. How will that work out for Forex traders? Interest rate hike in the cards. When interest rates in the USA go up, so does the US dollar. Fortune says to read the most recent Fed minutes and get ready for a hike. It's full steam ahead toward higher interest rates for the U.S. economy. That's according to the minutes of the most recent meeting of the Federal Open Market Committee, FOMC, the committee at the Federal Reserve in charge of setting interest rates. According to the minutes, most Fed officials said at their November 2nd meeting that it would be appropriate to raise the target range for federal funds rate relatively soon. Furthermore, a significant number of FOMC members think the move should be imminent. When the Fed does raise rates, those who have gone long on the dollar will be vindicated. But will this be a one-time event, or is it time to go long on the dollar for the longer term? Is this the 90s again? Our sister site, Profitable Investing Tips, asked recently if this will be back to the 90s for the stock market. When Bill Clinton was in the White House, there was an economic boom. The Wharton School of Business published a review of the stock market boom and gains in productivity in the 1990s. During the second half of the 1990s, the United States experienced a continuation of one of the longest economic expansions. The distinguishing characteristics of this period can be summarized as follows. 1. High growth rates of output, employment, investment, and wages. 2. High growth rates of labor productivity. 3. A stock market boom. 4. A financing boom for new and expanding firms. 5. A sense of moving towards a new economy. The downside was that the market crashed in the end, personal debt went to sky-high levels, and the middle class was left out. The Economic Policy Institute discusses how the 1990s boom was a bust for the middle class. The end result of the last round of supply-side economics with huge tax cuts was the worst recession in 3/4 of a century. Forex traders will be well advised to consider how to profit in the short to medium term from a stronger dollar, and then how to deal with total financial collapse the next time around. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.